Hello everyone and welcome. Before we begin, thanks for joining us today and welcome to this presentation, FX Street and Specialist Trading, where I share my insights, wisdom, and trading strategies from the floor. Now, for those of you who have not seen me speak before, just to give you a little bit of information about myself, I have actively been trading for the past 34 years. I started my trading tenure on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist for Donaldson, Lufkin, and Jenrette. After leaving the floor in the mid-90s, I continued to trade. I managed money. I trade my own account. And most recently, within the last couple of years or so, I really started getting more heavily into teaching. Thus, you see specialist trading. I started specialist trading roughly a couple of years ago. I was teaching before. I had spoken for various companies where, because of my expertise and experience, I actually taught for them their strategies and systems. But specialist trading is my own baby. It's my own strategies, what I've been trading for years, and things that I've learned on the floor. So I'm just passing over all the information. Now, I know even though we're talking about the Forex markets and my background is in stocks, I learned tremendous amount of information and tools and techniques that can easily be transferred over into any market, as I'm sure some of you have seen, and to any time frame. So it really doesn't matter whether my background was in stocks or futures. Everything pretty much with just a few minor changes can be easily transferred. So what I plan to do today is share with you my top strategy for trading the Forex markets. Now, I'm going to give you the basic components and the foundation for beginning to trade this strategy, which is usually reserved just for our members of specialist trading. But I'm going to give you all the information where you can actually begin using this as early as today if you'd like. So get out your pencils and paper. I'm going to give you tons of information. This is going to be one of our longer presentations. It's going to run 3 hours altogether. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you tons of information, a lot of performance results, and a lot of information that has to do with trading this particular strategy. But remember, we can in no way guarantee that any of the results I'm about to show you will be repeated in the future. So as you're taking a moment to view my disclaimer, I'd also like to mention that, as I said, I've been teaching for a couple of years, mainly focusing on teaching and mentoring. And one of the things I have learned is that as I see right now, many students like to ask questions during the presentation, and that's fine, that's understandable. But we seem to break up the flow of the presentation when we stop to answer a question and get back into it. I know some instructors like that style. This tends to get away from the point I'm trying to make. So as a favor, I please ask that you wait till the end of the presentation to ask any questions. I promise I'll go over each and every one of them. So this presentation, the first part, will roughly be about an hour and a half or an hour or so. We'll save the last 20, 30 minutes for questions. And then we'll begin the second portion of the presentation, and then we'll have more questions after that. So there's lots of ways to ask questions, and many times, if you kind of just hold off for a few more slides, your questions will be answered. I'll speak about them in just about 2 or 3 minutes down the road. So once again, I will not answer any questions during the presentation. Just wait to the very end, and I promise I'll get to them. And we'll have a question and answer portion. If we happen to run out of time, don't worry. I will give you a phone number as well as an email address. You can contact us at Specialist Trading. You can have any question answered as well. So there's lots of ways to get in contact with us, lots of ways to have your questions answered. Okay? So let's take it from there. Now, as I said, I first began trading on the floor. So my background is basically is in stocks. But everything I've learned can easily be transferred over to the Forex markets. So I want to share with you something that was in the Los Angeles Times. That's where I work out of, and that's where I trade in Los Angeles. And everyone will, basically who feel the same way after seeing this article. But I cut this out of an article that was just a couple of weeks ago in the LA Times business section that said, foreign currency trading is easy. It's an easy way to lose money. Now, more and more Americans are dabbling in currency trading and losing in spectacular fashion. Experts say the structure of the currency market make it hard for amateurs to beat the house. So the point is, already coming in with a negative attitude about how difficult it is to trade. And I know that trading can be difficult. I know that many traders are struggling. That's why you're probably here. And the reason why I know is because I went through this myself when I first began my trading career. I probably started trading just like most of you. And just to share with you how my own trading began, I was pretty much like everybody else. I was trying to pick tops and bottoms. I really didn't know much. I didn't have a degree in any type of economics or trading. I didn't go to business school. But when I began on the floor, I, saw what everyone else was doing and pretty much just tried to mirror them. I was trying to pick tops and bottoms. And, it would work for a while. I'd have 2 or 3 great months followed by a disastrous month where I'd give everything back. And then I'd have another couple of good months, maybe even a good year, but then 1 or 2 months where I'd give back everything I made in that 1 year. And so I realized I really wasn't getting anywhere. I was just pretty much treading water. I wasn't having anything to show for my trading. And I thought it can't, a lot of sleepless nights, and it can't go on like this. And I'm sure many of you may be experiencing the same thing. So even though I was on the floor of the exchange, very respected, wearing a coat, tie, and everything, I was struggling just like everyone else from time to time. So I did the first thing I thought you're supposed to do. I filled my trading plan with as much information as I could. I bought the most expensive technology, computers that I thought were going to help me. I was subscribing to newsletters. I was listening to a lot of trading gurus and trading guys getting their ideas. I purchased and created indicators and put them one-on-one on top of my trading plan just so that I could, try and find that particular edge. And I put all these different things and really, stack them on top of my trading plan, thinking that these things are going to make me more successful. And in the long run, I was trading worse than I had before. So it was at this point that I came in contact and noticed that there were these elite traders on the floor. These were a few specialists who were able to consistently generate gains whenever they wanted, trade after trade, month, year after year. Sure, they would have small losses from time to time, but they had some type of edge that I had to find out what they were doing. I figured they had to have some secret indicator. They had to have inside information about what was going on with the world news or something like that, or they, had to know something else or have something else that no one else had. So I kind of cozied myself up to them and got to know them a little bit better and asked them, what it was they were doing. And they said, well, what exactly is your trading plan? And I explained to them how I got tons of information. I was listening to so many things. I was listening to so many gurus, people on TV. I was reading books and newspapers. I was also looking at tons of indicators. I was looking at all financial reports. I was trading tons of markets. And there was no consistency to my trading. But I thought this is what the edge was, and I thought this is what they were doing as well. And what they said to me was basically, using those things will no sooner make you successful, just as paying for the most expensive pair of running shoes will no sooner turn you into a world-class sprinter. And this really just, shook me to the core. I don't understand. This is what I've always been taught. So I've been taught the more things you add, the higher you're going to raise your odds for becoming successful. And what they really said was basically their edge, in a nutshell, was the exact opposite. And what they taught me over the years and what finally got my trading on track and able to be consistent was more about stripping away this useless noise that for some reason we've been taught or learned to believe that this is what's going to make us successful. And so, going to a million chat rooms, going to trading rooms, watching the news, making sure everything is dependent on some news report, filling your trading plan with tons and tons of indicators. I mean, those things are actually standing in the way of your success. So getting back to that report in the paper, which I showed you, I really believe that that's really one of the reasons why so many traders, not just in Forex, but in any market, E-minis or stock, is because they make it difficult. They make it more complicated than it has to be. I remember the specialist told me specifically, he said, it's the easiest thing in the world to complicate your trading, but it's the most difficult thing in the world to simplify it. So that's really their edge. Their edge was not about some secret indicator or some inside information they had, but it was about simplifying your trading, using things that you probably have heard of a million times before, which I'm going to show you today, which I'm sure you've seen before and heard, but knowing how to use them and just being confident and know that their simplicity will make you consistent. So my goal is to teach you how to trade with this specialist edge, which is really about not adding things, but taking things away that you think will make you successful. Okay? Now, I trade for a living, but, my goal is to teach you these things. And so I'm trying to teach you. I give you a ton of information. People that have come to my webinars before know that I spend the majority of time talking about and sharing with you techniques and edges, and then the last portion talking about my website. And there's no obligation at all. So I'm going to really spend the majority of these two presentations talking about things that you can start using as early as today. So that's why I always say get out your pencils and paper, and here's what you're going to learn. Remember, these are two parts today. Part one is open for everyone from what I understand, and I'm going to give you two edges. Now, if you've seen my presentations before, these are the same edges I've talked about, but they're extremely, extremely important. Now, one edge is designed to get you on the right side of the market. So you're never going to have to ask yourself, boy, should I have been shorting the Canadian dollar, or maybe I should have been buying it? Gosh, I don't know if I did the right thing. Well, this edge will give you a high probability for doing the right thing, being on the right side. And then the second edge I'm going to give you is a proprietary entry technique. It's our confirmation entry method. Now, these two edges we use in just about 99% of all of our strategies, all of our methods at Specialist Trading. I'm going to share them with you. I'm also going to show you numerous chart examples of how well these work and how they sometimes don't work, the ways in which you can elevate your trading. So we're going to go over all of that information, and then we're going to have a question and answer period like I promised you. And so you'll be able to, ask any questions you like, and we'll go over all of this information and then be able to, answer anything you might want to ask me about what we've gone over. And then we'll go into the second part of the presentation, which will be part two. Then I'm going to talk about the difference between a system versus a strategy. So many people were, they're probably trading the wrong way, or they're looking for information in one category, such as a system versus a strategy. And so you have to know, first of all, what style you're trading and what best fits your personality. And then I'll give you another edge. This is another edge. This is a main component of the strategy we're going to be sharing. And this is a pattern that captures 2 to 5 day moves, has a high probability. I'm going to share that with you as well. Then we'll put all these components together. We'll put all the little techniques and everything together and start the basis or the foundation for strategy number 5. So you'll start to see exactly how you can start trading with everything I've given you today in the second part. And you'll be able to enter trades, whether it's, intraday or daily bars or even monthly bars, using what I'm going to be sharing with you today. I'll show you current trading examples. In fact, we've had some really great trades in the last couple of days, fantastic trades that are going on right now. The same information I'm going to be sharing with you today. And then I'll show you 7-month trading results. We just started really posting this for our members on a nightly basis for the past 7 months. I'll show you how well we've fared in the past 7 months. And then, once again, to close everything up, we'll have a question and answer period. Okay? And don't worry, if we do run out of time, once again, you'll get my email address, phone number, if you want to contact us, and we'll answer any question you can have. Okay? All right. So let's get out our pencils and papers. Let's begin. And let's start out with this example. I usually start out showing our first example in the dollar yen. Now, these are older examples, but they're meant for educational purposes. As we see here, we have a really nice downtrend happening in the dollar yen. Okay? Now, the way most traders would think at this point is, well, okay, this thing is falling out of bed. I subscribe to some newsletter. This guy says that we're hitting the bottom. We look like we made a little double bottom here. And I think it's going to have a really big bounce. Okay, maybe back up to these levels, 50% retracement, maybe whatever, there's some Fibonacci numbers, something. So I'm going to jump in there and buy this. Okay, so you jump in and buy. And then, lo and behold, by the end of the week, the dollar yen is making even lower lows. It's much lower than it was when you first started looking at it. Okay, look familiar. How about this? British pound. British pound's been going straight up. Okay, but you feel it's tremendously overbought. There's no reason why it should be this high. In fact, you think this is a blow-off. And all the people you talk to, or people you trade with, or somebody you watch on TV says, the British pound has to be shorted. So it's starting to curl over. And you want to miss this. You think it's going to literally fall out of bed. So what do? You go in there and you sell. Next thing you know, by the end of the week, it was almost as if it was waiting for you, and it's flirting with the old highs. Does this look familiar to anyone? This can happen on a short-term intraday trade. This can happen on daily or even monthly bars. Okay? Well, what if there were a tool or some type of a technique that could keep you out of these bad trades where the minute you get in, it goes the wrong way, it goes against you? Or a high probability tool that could at least give you a little bit more confidence that you were doing the right thing? Well, there is. This is our first edge. This is edge number 1. This is the buy-sell line. Okay? The buy-sell line. Now, this is the most important component we have at specialist trading. It's the most important thing we have, and it's the foundation for virtually all of our techniques, all of our strategies, all of our methods. It's extremely important, but extremely simple, because all it is the 50-period buy-sell line. That's all it is. 50-period simple moving average, I should say. But in order to use this properly, here's what I want you to do. And if you have time, if you're in front of your computer right now in terms of your charts, I want you to plot a 50-period simple moving average on whatever chart you're looking at, whatever market you're looking at. And you have to plot this on each and every chart. I don't care if it's a 5-minute chart or a monthly chart, but you must plot this. Okay? Now, how do we use this? All right, in order to use the buy-sell line properly, all you have to do is ask yourself this question. But you must ask yourself this question before you pull the trigger. So I don't care what strategy you're using. I don't care if it's something based off fundamental news or something based off an indicator. Before you buy or sell, ask yourself, where is price in relation to this buy-sell line? Okay? Ask yourself again. This is how important this is. Where is price in relation to the buy-sell line? And once you ask yourself this, you're only going to come up with 2 possible scenarios, because if price is above, this means you're only going to be looking to buy or to go long, okay, for buying opportunities. If price is below, then you're only going to be looking for selling opportunities, all right? I know it sounds simple, but remember, this is what we're trying to instill in you. For some reason, you thought that the more complicated you make your trading, the more valid it will be. But it's the simple things that are going to put you on the right road to success. So let's see how this simple technique works. Once again, looking at that first chart example we had in the dollar-yen. Now, originally, we wanted to go long, and we saw that we had no business going long, because once we added the buy-sell line, we ask ourselves, where is price in relation to the buy-sell line? Price is below, right? So we had no business even considering buying. If price is below, we're only looking for sell setups. So therefore, you never would have had a losing trade, and you just increased your chances for success right off the bat. How about this example, the British pound? Remember, we wanted to go short, but then the minute we shorted it, it was like it was waiting for us. We went straight up. Well, now that we have a little bit more information, we add the buy-sell line. And we say, where is price in relation to the buy-sell line? Price is above. So we have no business even considering going short. All we should be doing is looking for buy setups. So there, right off the bat, you increased your chances for success by being in sync and learning how to listen to what the market's telling you. Now, this is not a strategy. This is probably the biggest mistake most of my beginning students make, is they think, well, okay, so the minute it crosses over or crosses below, I'll go long or go short. No, this is a technique to get you on the right side of the market. This is an edge to increase your chances for success. This does not mean simply because we're above to go long at the market or we're below to go short. What this means is, now that you're above, you know that the only setups you're going to be looking for are buy setups. And if you're below, this means the only setups you're going to be looking for are sell setups. Okay? Now here's a chart in the euro dollar, which was just this last month. Now, a lot of people were saying that, it's gone up too high. It looks like it's rolling over on this little blow off, so you might have thought, well, this is where I'll sell, right? This was just coming into April. We apply the buy-sell line. We ask ourselves, where is price in relation to that buy-sell line? Price is above. Okay? So we should not even consider selling. Forget about what maybe, some newsletter is saying, or what some trading room is saying, or somebody who thinks they're a genius. Forget about them. Just listen to what the market is telling you. So the market was telling you we're above the buy-sell line. There's no reason why we should even consider going short. How about this? Canadian dollar, okay? This was in February of this year. All right, now, say you're looking at the chart, you go, well, we look like we made a little double bottom here. We're in a range. I'm going to try and trade this range. I was listening to TV and some commentator was talking about how we've been in this range, and I'm going to take advantage of that. So we're probably getting the low. We're probably going to bounce all the way back up here again. So I think I'll buy it. Looks like it's turning around. Okay? So what do? We add our buy-sell line, and we ask ourselves, where is price in relation to that? Price is below. So we have no business considering going long. Just forget about it. Look only for shorting opportunities. And as you can see, you maybe would have had 1 or 2 days of up movement, but had you not been quick and gotten out, you would have turned that trade into a nice loss. So it's just not worth it. It's not worth it gambling or trying to make a small gain when the trend is really going against you. So these are all simple things. Once again, I know people have said that, well, Steve, you always talk about this. This is always in your webinar. But for some reason, people don't use it or they don't use it enough. I wouldn't talk about it if everyone really focused on this simple but basic tool. Any time frame, 5-minute, daily, really doesn't matter. Let's look at some current buy-sell line examples, okay? Now, these are the markets these are snapshots that were actually taken yesterday. So you know if you're going to be on the right side or not. Here's a snapshot of the Australian dollar taken yesterday. Where is price in relation to that buy-sell line? Price is above. So you know that until the Australian dollar is consistently below this buy-sell line, you're only going to be looking for buy setups. There's no reason to even consider shorting. No matter what someone says or no matter what you hear, don't even consider it. How about this? Here's a Swiss franc. Where is price in relation? Price is below. Okay? So there's no reason right now, this is a current chart of the Swiss franc, to even consider going long. No matter if someone is telling you it's tremendously oversold and it's too low, it shouldn't be at these levels, don't worry about it. The only setups you should be looking for are short setups, because over time you will add consistency to your trading. Remember I spoke about before how I would have 2 or 3 great months and then I would lose everything. Well, this is what I was doing. I was trying to pick tops and bottoms, and say an example like this, I'd pick a bottom and it would work great. And I'd look like a genius. And then I'd look like a fool later on because I gave everything back. So stay in sync with what the market is telling you. Here's a current snapshot of the euro yen. Now we had a little spin below here, but remember, this only means that what we're looking for is setups. Just because we have 2 or 3 days below does not mean you're going to go short. Remember, this is not a strategy. This just means that in this time period here, you were looking for some setups. I'm sure you didn't see a setup in 2 or 3 bars. You need a little bit more information than that. Okay? So for all intents and purposes, we should only be looking to go long the euro yen right now. And the British pound. Now here's a great chart. A lot of people always have trouble. They say, well, Steve, it's easy to see when, you have a real nice uptrending slope or downtrending slope. But what about when it's like crisscrossing the buy-sell line? It's a little more difficult. That's true. But once again, go back to what we said. What the basic rule is, we're only looking for setups in relation to where price is to the buy-sell line. We're not simply going to go long or go short. So just because we crisscross doesn't mean we're buying and selling and buying and selling. We're not doing that. We're simply, once we're below consistently, we're looking for setups. If there are no setups to go short, then once we go above, now we're looking for setups to go long. And I can tell you right here, there were 2 setups using our proprietary strategies which would have had you long in this month period alone in the British pound. Now, as I said, this also works intraday. This is not just something built for daily bars and, if you want to hold positions overnight, you can use the same concept if you're trading, a 30-minute bar or if you're trading a 4-hour bar. Here's a 30-minute bar of the Australian dollar. Okay, and remember, the daily bar of the Australian dollar was up. I told you should not be shorting the daily bar. But on a 30-minute time frame, where is price? Price is below. And look it's amazing how even though the longer term is above, the shorter term is below. So in this time frame, we should only be looking for short opportunities. How about this? The Swiss franc. Now the Swiss franc on a daily time chart was below its buy-sell line. Looking at a 60-minute chart, it's above here. So this is amazing in terms of you can, on a short term, go long but on a longer term, you can be short. Now, this is where my students really have trouble. They said, but Steve, I was always taught that if the longer term is telling me to go long, how can I go short on the shorter term? I know a lot of my students have trouble with this. They swear that it works. Personally, I have never found any consistency to that rule. I'm not going to tell you not to use it, but I've never found any consistency where it works all the time. So I'm looking for high probability edges. Sometimes it works, sometimes it doesn't. So here's what I do. If I get a signal on a 60-minute time frame, that's all I'm looking at. I don't care what the daily bar says or the monthly bar on top of that says or the weekly bar. I only look at the chart I'm looking at. Okay? So whereas the daily bar chart of the Swiss franc told me I should only be looking for short opportunities, that's fine. If I had a signal to go short on a daily time frame, I would take it. But if I were day trading and I see here that price is above, then I would definitely go long because I'm trading the time frame. I'm not trading a time frame telling me, what to do on a higher time frame down to a lower time frame. Okay? The euro yen. Now the euro yen we showed you was going up, it was above, but on the 90-minute time frame, it's obvious to see that the euro yen is below its buy sell line. So if there is a signal, then to go short on the 90-minute time frame, let's go short. And then the British pound. Remember we said the British pound was kind of zigzagging back and forth. Well, here it's clearly above the buy sell line. So we would only be looking for long signals on a 4-hour chart in the British pound. All right, so I have a homework assignment for you. We're not completed yet. Don't worry, this presentation isn't done. But the homework assignment is I want you to go back and look at your last 10, 20, 30 trades, 30 investments, whatever they were, applied with the buy-sell line. And I want you to see where your trade was in relation to that buy-sell line. And I can almost guarantee that if you had a losing trade, you were out of sync. In other words, you were buying when you should have been selling and vice versa. Or if your trade really didn't amount to much, it was very difficult, it was most likely you were out of sync. So just go back and check, and you'll see the simplicity of this rule, but how well it works. Remember, trying to instill this air of simplicity. This is what's going to get you on track. Not the number of trading rooms and chat rooms you go to, not the number of programs or techniques and indicators you watch, but the simplicity in your trading will keep you on the right track. All right, now let's talk about trade entry, okay? Because so far all we've talked about is just being on the right side of the market. We are not in any way, shape, or form using this as a strategy or a system. Remember, we're not entering just because price crossed over the buy-sell line. This is not a strategy or a system. This is just a technique so that we know we're in sync with the market, we're on the right side. But now we need to know how to enter. We have to know where to get in, and let's talk about trade entry for a while. And let's talk about, in my opinion, the top reasons why most traders enter a trade. Okay? And I'm sure you may find yourself in one of these categories. Excuse me. Firstly, let's say you enter a currency pair trade because you, like looking at the Canadian dollar or the Swiss franc, you go, oh, this is too low. This currency pair is too low. We're at major support levels. And it is so low, it's never been this low before. Or someone I watched on TV said it's so low that this is a steal. It's going to have a tremendous bounce. So this is your reason to enter into the trade. You buy a currency pair because it's way too low. Or vice versa, it's too high. The Australian dollar is off the roof. It's going too way high. It's way too overbought. All of its indicators say it's way too high. It's gone through resistance points. It's going to just fall out of bed. So I'm going to enter and short it. Okay? Or let's say once again you subscribe to some chat room or trading room and you listen to this trading guru and you just basically mirror whatever he does. You watch his trades or his signals and you do what he does. That's how you decide to enter into a trade. You're just mirroring basically someone that you trust. Or you could be a technician. All right? You love to get as many indicators as you can. You love to get all the information and the overbought, oversold indicators, all of the the GAN, the Fibonacci, everything you can think of. Put them all together. This is what tells you whether you're going to get in or not. When the numbers cross, this is your sign to get in. And then, lastly, the most important one, which I believe many people use, is fundamental news. Okay? That's what they use. They like to, wait for a report to come out. There's no way I'm going to ever enter a trade until I see what that economic report is. How can I enter if I don't know what the news is, right? I mean, I'm not going to buy until I see what that is, or I'm not going to sell until I see what's happened, all right? So these are the main reasons why most traders enter a trade. But there's one thing that's fundamentally flawed in all these reasons, okay? Because basically, all these reasons have one thing in common. And that one thing is that they're using an outside source to tell them what to do, either a chat room or some news or an indicator, but it's not the main thing they should be focusing on. See, all your decisions to enter, to exit, whatever, to get a signal should be based off of one thing, and that one thing only, and that's the chart in front of you. Remember, I'm trying to teach you to listen to the markets. And what most people have been taught, what we think we're supposed to be doing, is listening to other things that'll tell us what to do. And when you do this, you take yourself out of the game. You should never do that. You should be a part of the process. And the way you do that is by listening to the market, learning how to listen to the market instead of having this useless chatter going on all the time. Okay? So, you need a clear-cut plan. All right? And this plan must be based off of what the currency pair is telling you and not what an outside source is telling you. Okay? Remember, an outside source can be a chat room, it trades somebody on TV, it can be a newsletter, it can be someone you're mirroring their trades. These are all outside sources, but we only want to be taking our cue from the currency pair. All right? This is the way I traded before. Remember I told you I had all these books and fundamental news and I subscribed to all these newsletters and everything. These things will no sooner make you successful, just as paying for the most expensive pair of running shoes will no sooner make you a world-class athlete. And save your time, save your money, save your energy. It's much easier just to sit in front of your chart. All right, so here's our second edge. All right, this is our edge for entering into the market. This is called our confirmation method. Okay, now what exactly is this confirmation method? What is this edge we're talking about? All right, the confirmation method is the verification that the trend has resumed in the desired direction. Very important that the trend has resumed. This is your signal to enter the trade. Not a signal from what some trading guru is doing, you're watching in a trading room, or what some news information came. You're watching the currency pair to see that the trend has resumed. A specialist always waits for his trade to be confirmed before entry. Okay? So picture this. This is the example I use most often and seems to resonate with new students especially. Picture you're at a train station. You want to go from point A to point B. All right? So you're waiting at the train station. You're waiting at the tracks, at the queue. And as you're waiting, you are sitting there and you see a train coming down the tracks. But the train is headed in the opposite direction of where you want to go. It's going in the exact opposite direction. But guess what? Most people will jump on that train, just the way most traders jump on that train. For some reason, that's the way most traders trade, trying to pick a top or a bottom, getting on the train when it's going the opposite direction because they're hoping it's going to turn around. Confirmation means that you're waiting for a train and you see a train coming down the tracks that's going in your direction, and you just simply jump on board. It's a much easier way to travel. You know that you're going in the right direction right from the beginning, and you're in sync. And that's what we're trying to explain to you. We want you to be in sync, learn how to listen to the market, and then be in sync with it. All right, so this is what confirmation is. These are the rules. You may want to write this down. And remember, this is not a strategy. This is not a system. This is just a technique for entry. So this means that you can basically use this on any strategy you want. It doesn't matter if your strategy is based on fundamental news, on indicators, or if it's based on the pyramids. It doesn't matter. You can apply this today if you'd like. This is the confirmation method. So let's say that your strategy, once again, whatever it is, gets a buy signal. Okay? What do? Well, for buys, you're only going to buy once price trades 1 pip above the previous bar's high. Okay? That's the confirmation. That's the confirmation that you have a higher probability for success, that it's going in your direction. Okay? Is it guaranteed? No, nothing's guaranteed. But you now just have a higher probability of success rather than trying to buy something that closed on the low and you feel, oh, it's way too low, I got to buy it because it's a steal. Like I said, that'll work 9 times out of 10. The 10th time, you'll give everything back. Let's say your strategy, whatever it is, say it's based off of the tides of the ocean. Okay? All right? So you sell. Instead of just selling when you feel something is too high, only sell once price trades 1 pip below the previous bar low. You just increased your chances for success. Okay? Why? Because you are in sync with the direction of the market. All right, let's look at the examples again. Here's our example. We're looking in the euro dollar. All right? First thing we ask ourselves, where is price in relation to the buy-sell line? Price is above. So this means we're only going to be looking to go long. We're not even consider shorting the euro dollar. There's no reason to even think about going short, regardless of what an indicator says, regardless of what some chat room says. Who cares? We're only going to be thinking about going long. And let's say your strategy gets a buy signal. Great. Okay. Now, normally, you'd want to jump in and just buy right here because you feel like, hey, we sold off. I'm going to catch it at this, low we had today, and I want to jump in. But then you said, well, wait a minute. I went to Steve's presentation. This means I really shouldn't jump in right now. I'll only buy if we trade right here, 1 pip above the signal high, or as long as the signal is in effect. Okay, so you wait. And let's see what happened the next day. Guess what? We never got that high. But the buy signal is still in effect, so now you'll buy 1 pip above this day's high. Okay? Whoa, look what happened. The euro dollar went down. Is your buy signal still in effect? Yes, it is. So now you'll buy once we trade 1 pip above this high. It looks like we're starting to bottom out. You still haven't gotten in yet. We're still using this confirmation method. So let's see what happens on the next day. Finally, we go above the previous bar's high because the signal is still in effect, and that's where you enter. Now here's the one thing that almost every student says when they begin using this. It's because they're just not aware. They said, Steve, I understand this concept, and it looks pretty good on paper, but I originally wanted to buy right here. And when I used the confirmation method, I bought right here. And so I gave up like 20 or 50 pips. I could have bought at a better price. Why did I have to wait so that I could pay higher? Okay? Here's the answer. The confirmation method is not designed to get you in at a better price. That's not what it's designed for, and that's not its motivation. The confirmation method is designed to get you in sync with the market. When the market is telling you that it wants to go in a direction, you jump on board. And I know as traders, most traders, once they jump into a position, the first thing they want to do is see it go their way. You buy something, you don't want to see it go down even 1 pip. You want to see it continue to go higher. And I know especially most of my beginning students will not be able to sit out this 4 days of sell-off. They probably, once they bought and saw you had this large sell-off here of 100 pips or so, would have thrown in the towel. So that's another thing. The confirmation method will not make you go through a lot of sleepless nights most of the time. Not guaranteed, but many of the times you'll jump on board when the train is leaving the station. As you can see here. So it's designed to get you in sync. It's not designed to pick a top or a bottom. It's not designed to get the best price. It's designed so that you have a high probability for success. All right, here's an example in the Canadian dollar. All right. Now, we ask ourselves, where is price in relation to the buy-sell line? Price is below. Okay, so this means we're only going to be looking for short setups. Now, let's say your strategy, whatever it is, decided to go short. Great, you're in sync with the buy-sell line. All right. Now, normally you would just jump on board and say, well, it's looking like it's rolling over. I'm going to jump on board. But you went to today's presentation. You said, I'm going to start using that confirmation method. I'll only go short if we trade right here. And as you can see, as long as the sell signal is still in effect, we have not gotten short yet. We're still relatively below the buy-sell line. And then finally, we enter. Now, in this particular example, we got a better price. But that's irrelevant. We're not concerned with getting a better price. The only thing we're concerned about is being in sync with the market. Okay? And as you can see, it continued in that direction. Now, let's say you could have taken profits here at this double bottom, say. You thought, well, it'll have some support, whatever you look at, but you still don't like the Canadian dollar. Well, you can continue to use this technique as long as you have some type of sell signal in effect. And you'll see that it really gets you in sync with the market and that you're really listening to the market for the first time. Okay? This works just as well on an intraday bar chart. Here's a 30-minute time frame of the British pound. Okay? Normally, you're above the buy-sell line, so you're doing the right thing by wanting to go long, but you'll say, you know what, I'll wait till we trade 1 pip above. And it's a good thing you did because it didn't go up right away. Eventually it did go up, so it was a good buy signal. But once again, had you purchased the way you normally do, I guarantee once we got down to these levels, you probably would have said, I'm throwing in the towel, I'm out. And which would have been the exact time when you should have been thinking about getting in. All right, here's a 4-hour chart of the euro-yen. All right, now we're kind of backing and filling once again above the buy-sell line. But in these last 2 days, we're pretty sure we are well below the buy-sell line. So you want to go short. You think, well, we close below this major bottom here. Our close is below. This is a great short signal. Whatever strategy you use to say this is a sell signal to you. All right? But you're not going to go short until we trade 1 pip below. Well, had you waited, you not only would have gotten a better price, but you would have had a nicer gain too because you were in sync. The market was telling you that eventually it is going to go down, but just wait till we have this little snapback and then jump on board once the train has left in the desired direction. Okay? Now, there's also another advantage to using the confirmation method because the purpose of it is not only to get us in at the beginning of a trend, for us to be in sync with the trend, but it's also to keep us out of bad trades as well. So many times, it will keep you out of something that you think is going to be a good trade, but by not buying or selling 1 pip below or above the previous bar's range, it will keep you out of a disastrous trade. Here's an example in the Canadian dollar on a 60-minute time frame. All right? Now, let's say you love your technician and you love this pattern. It's a high-level consolidation. You have a nice rally, and then it's consolidating. You think there's some type of a pennant or a flag, and it's going to bust out to the upside. So you want to take advantage of this. Okay? And normally you said, boy, it looks like it's starting to roll over. We've made some nice bottoms here. I'm going to buy. That's what you'd normally do. So, you're just about to pull the trigger. You say, well, we're above the buy-sell line. I'm listening to what Steve said, but oh, wait, that's right. Confirmation method. I forgot all about that. So, here's where I'll buy. If I trade 1 pip above here where I wanted to get in. And as long as I'm, interested in going long, I will continue to watch and see if we go above there. And as you continue to track, you see that we never traded above the previous bar's high. And guess what? The confirmation method kept you out of trouble. It kept you out of a terrible trade. This was not a valid trade. And had you bought where you originally did, you would have turned into a long-term investor because you just would have held on to this, hoping and praying for it to come back. The confirmation method helped you to listen to the market. And the market was telling you that I can't go higher than the previous bar, so I don't have enough energy to go up any higher. So you're learning to listen, so you stayed out of trouble. Now, does this work 100% of the time? No, this is not a system or a strategy. But as I told you before, I'm giving you edges and techniques that will raise or increase your probabilities for success. And you can start using these today in your own strategies. So let's review what the confirmation method is. The main part of the confirmation method, the most important thing is to listen only to what the currency pair is telling you. I do not believe in chat rooms or trading rooms. I do not believe in fundamental news. I do not believe in using tons and tons of indicators. I use maybe 2 indicators at most at a time. Most of my attention is only looking at what the market is doing and listening to the market. This is what has helped me to be consistent, not those other things. Okay? Remember, the edge that the specialist instilled in me was to get rid of all that noise. That's what keeps you away from being successful. There's a lot of noise that you see here and there in chat rooms and trading rooms and even in these presentations. These are things that will keep you from being successful. So only listen to what the currency pair is telling you. That means to buy above the previous bar's high. Okay? So buy above the previous bar's high if you get a buy signal, regardless if you're using one of my strategies or someone else's or your own. If you want to go short, sell below the previous bar's low. Okay? And as a special advantage, the confirmation method keeps you out of losers as well. So this is a great technique that will not only, get you in sync with what the market is doing at that particular time, but it's also going to keep you out of losers. So, as we said, nothing is 100% guaranteed. I will not sit here and tell you that these work all the time and that they work in every time frame, but they elevate your trading so that you now have this edge of consistency that you didn't have before. So that's what we're striving for. We're striving for you to actually become the trader that you want to be. And the only way to do that is to simplify your trading. Okay? And these are very simple things. I don't think it's very difficult to add a 50-period simple moving average to your any one of your charts you're looking at. And it's not something magical that it has to be 50-period simple moving average. And it's not magical that it has to be simple moving average, or that it can't be exponential, or that, or you have to look at the slope. It's just a tool to help you be on the right side. In other words, there's no number. If it trades 1 pip above, all of a sudden everything changes. It's just a tool that will help you overall. Okay, I see a lot of people, are always asking me the same question, like, well, I like to use a 60-period moving average, or I use a 44-period. That's fine. If you want, just as long as you use the same concept, though. There's nothing magical about the 50-pair. It just seems, from my experience from trading 34 years, it seems to cover all the bases much better than these others. And it's very simple. 50-period is easy to remember. Okay? So this will give you that edge. This simple thing about if for some reason you have trouble with using the 50-period simple moving average, you want to use an exponential, or that's fine. As long as you use the same concept, which is if something is above that, you're only going to be looking for long setups. As I said, your homework assignment was to plot that and look at your trades and see the level of consistency you had if you were out of sync with that tool. Now, see if you could have increased it by applying this buy-sell line, and then if you could increase it even more by applying the confirmation method. These two tools, these two methods, are at the root, as I said, of almost all of our strategies of everything we have available at Specialist Trading. These are the core, the foundation of all of our trading tools. So even though this can't be quantified, because I see people asking what percent edge, it will increase your level of consistency. And the thing is, I'm giving you this information for free. Try it. If for some reason you try it and you don't understand it or it doesn't work for you, that's fine. You didn't waste any time. You didn't waste any money. It's there. It's free. But it's certainly turned around scores of traders that I've improved their trading, hundreds of traders, and my trading as well. Okay? All right, so let's recap. What did we go over today? I gave you 2 edges. The buy-sell line. This is the most important tool we have at Specialist Trading. This is the 50-period simple moving average. If you have a terrible reaction to using that, if it must be a exponential or a weighted moving average, if it must be a different time frame, that's fine. Just please use the same concept. If price is above, this means you're only going to be looking for long opportunities. If price is below, you'll only be looking for shorting opportunities. That's all this means. Okay? And just apply that and then go back as your homework assignment and see how well you would have done had you used that on your past trades. Okay? Then we have the second edge, which we talked about, our second most important edge out of the number of edges we have at Specialist Trading. This is our confirmation entry method. Confirmation is basically just a tool that will level your, that will increase your level of consistency for entering. Why? Because you're taking the cue from the market. The market is telling you that it wants to go one direction and you're jumping on board. You're just confirming it though. And it confirms this by trading either 1 pip above or 1 pip below the previous bar's range. So if you're going long, don't just simply buy at the market or buy if something closes on its low. Say, oh, I'm going to buy because it's too low, it's too oversold. You should never enter a trade that way. enter a trade when the market tells you it's okay to get in. And it does this either by trading 1 pip above or trading 1 pip below. Does this work 100% of the time? No, as I've said thousands of times. There's no guarantee for anything. But will it increase your chances for success? Yes. So just, use high probability tools. Use the reason why I don't look at news is because there's really no high probability to that because it's subjective. You can have one person look at a bit of news and say, oh, that's positive for the euro, and another person says, no, it's negative. So there's no, level of consistency to it. But with these tools I'm giving you, there is a level of consistency. We have this 2-step forward, 1 step back. Okay, so you have this type of consistency where you have this nice upward slope in your P&L now, instead of this roller coaster where it's going straight up, straight down. You have a great 3-4 months and then you lose everything. And I'm sure a lot of you have gone through that. If you be honest with yourself, a lot of you have. And then I showed you numerous chart examples of how this can work and how it doesn't work at times as well. So you have chart examples showing you exactly how to implement it. And remember, all of these things are not strategies. They're simply tools. You can begin using them today. Let's say you want to go short the Canadian dollar, okay? It's below the buy-sell line, all right, on a daily bar chart. But rather than just going short the market, you wait for it to trade 1 pip below the previous bar as well. Or say you want to go long the British pound. Well, it should be above its buy-sell line. Okay, so that's good. You're in sync with that. But you don't want to simply buy. You have to wait for it to trade 1 pip above the previous bar's high. Okay? All right, so ask yourself, once again, would any one of these things I've given you today help your trading this past year? I really think your answer would be yes. You don't have to use my strategies. I'm saying if you apply them to your own particular strategies. There's no reason why this can't work on anything else, even if it was just based off of, either sunspots or it was based off of fundamental news. It doesn't really matter. You can still apply it. Now, here's a snapshot of my website. As I told you, I give instruction in stock trading, E-mini trading, and Forex trading. We have strategies, completely different and total strategies for each and individual courses, upwards of 10 strategies for each individual course. If you become a member of my site, you're going to continue to receive detailed instruction just the way I gave to you today. Numerous Forex strategies. Now, Forex strategies we have designed for particular style you have. If you're a long-term trader, short-term trader, intermediate-term trader, we have strategies that fit all those categories. We give you updates and signals, but remember, these are for educational purposes only. I don't force-feed signals to people so that they'll just mirror what I'm doing. I want you to learn to spot these so that ultimately you can go on your own and just spot them in whatever market you want. So these updates and signals are meant basically for you to just check your work to see if you're in sync and if you've learned properly that we did get a short signal yesterday in the Swiss franc or in the Canadian dollar. I give weekly webinars where I go over the week's trades and the week's setups. Everything is archived, so if you don't have a chance to attend the webinars or you can learn at your own time frame and you can just take it easy. And then lastly, it's a lifetime membership. This is not something you subscribe to per month. You're going to be a student of mine for life. I've been trading for 34 years. As I said many times before, I don't plan on stopping to trade in any time future, in any near future. So it's a lifetime membership. As long as I'm trading, you'll be trading right alongside with. All right. We've been going about an hour now. We are at the question and answer portion, as I promised. We'll save the next 15, 20 minutes for questions, and then I will take a short break, and then we'll start part 2 of the presentation where I'll go deeper and talking about the formation of a strategy of all these tools we've given you and some more edges so that you can put them all together and have the makings of a trading strategy. But if you have any questions concerning my website or anything on the website, please do not hesitate to call at 310-844-7220, or you can reach my trading associate, Brett, at brettm@specialisttrading.com. I see the question here. Alex says, what about the stop loss? Stop losses, one of the things I'm going to actually be covering more in the next class because we're going more and more into detail. And actually, the stop losses is something that is, we have proprietary stop loss. We have a number of different stop losses to use as well as exits. And it all depends on what type of a trader you are. It's my opinion that, after trading over the years and after seeing what type of traders people are, many traders are aggressive and many traders are very conservative. And so because of that, you need to have different stop placements, different exit levels, because if you basically construct a strategy that is built on being conservative,
An aggressive trader won't like it. He won't trade it. And even if he does trade it, he won't be successful because he won't be able to follow the rules properly. So we give you all these different options to trade whether you want to be aggressive or conservative. Different stop placements for the aggressive trader, different stop placements for the conservative trader. Likewise on the exit side as well. William asks, do you consider support and resistance, major tops or bottoms in entering trade? That's a good question, William, and no, I do not. Once again, it's because I have not seen any consistency. And all I'm looking for is for the market to tell me what to do. I'm not going to look back and say, well, it was a double top, so the market should stop here. See, that's my own outside source telling me, or what people have said or what I've learned should happen. Or it should be a fake out, breakout, and then come back down. See, I'm using things that are outside of basically what's in front of me. I'm just, what I teach is to listen to what the market is telling you as you're seeing it happen in real time. And I'm not talking about a 5-minute chart. I'm talking about a daily chart or a monthly chart. If I get a signal, I'm not concerned whether there's a bottom or a top. I just look at what the market's telling me. Once again, I'm kind of ahead of the game here because there's so much more information that you don't know about. If you're a member of the site, you understand what I'm talking about. But I'm trying to cover that in the next presentation as well, in the next hour and a half. What about false breakouts? Well, many times you'll get false breakouts because it's actually not a very valid signal. So the strategies that we incorporate are based around things that the market is telling us that this is a high probability valid signal to go long or to go short. So most of the times when you get a false breakout to the upside or the downside, it's because it's not the breakout that is false, it's your signal that is false or faulty. So most people, have the structure of their signals, they're not really based off of valid things. Once you get your signal, which is based off of, once again, what the market's doing, you have less and less false breakouts. Even though they will happen from time to time, but with proper money management, that's okay. It's the money management that will sustain you, okay, not the signals. Please, how would one handle whipsaws in the market with the confirmation method? That's a good question. They're asking basically, how do you handle whipsaws with the confirmation method? Once again, this kind of goes back to my question, or I should say my statement on the previous question. You're getting whipsaws because you're getting in and out of the market on faulty signals, okay? And that's usually the fault of how the strategy or the system was constructed. Once you have a strategy that is built on a solid foundation, you have less and less whipsaws. And all of these tools actually are designed to keep you out of whipsaws. So in other words, if you use the basic tool, which is the buy-sell line, okay, that means that, the market is telling you that it's either above or below. Odds are you just decreased your chances for whipsaws because you're in sync with the market. You're only going to be going short now. Mostly you would be getting whipsawed if you were going long and the price was below the buy-sell line. So the point is to be in sync with the market, which we, teach you, is what I teach and what I share with you. And once you're in sync with the market, once you're listening to the market, all of a sudden you're going to see you're going to have less and less whipsaws. And when the market is just very choppy, these tools and edges keep you out. So you're not even going to get a signal. I've gone days, even weeks without a signal. And the market has been very choppy. And my other trader friends would tell me, boy, they're getting killed. They're getting whipsawed back and forth. And I'm not even in a trade. And I'd rather not do anything to get whipsawed. So our techniques and the methods will keep you out many times. And so therefore, you won't even have to confront being whipsawed because you won't be in a trade. Once again, I'm getting a little ahead of myself because you'll explain it a little more when I give you more and more edges down the road. Okay, but this is what we teach, and I'm not going to sit and promise you that, well, Steve says he's never had a whipsaw or he's never lost in a trade. That's not true. I recently had a trade where we had a loss of roughly close to 200 pips in a trade, and that was one of our major losses. And guess what? It was all made back a week later or days later and more. And so, this will happen from time to time. That was probably one of the largest losses we've had in the last 7 months. But you have to have this consistency to your trading. It's not about not losing. It reminds me of a friend one time who wanted me to teach him how to ski. And I said, sure, we'll go skiing. I'll teach you how to ski. I've been skiing for years. I love skiing, and I'll teach you how to ski. And the first thing he said was, okay, but I don't want to fall down. And I said, you don't want to fall down. I said, everybody falls down. I still fall down. He goes, no, I don't want to fall down. That's not the way to ski. I said, everyone falls down. World-class skiers fall down. And it's the same way with trading. Everyone loses. Everyone loses from time to time. The main thing is you want this level of consistency. And that's what these traders taught me on the floor, how to trade consistently. English says, in part 2, will you complete your teaching on the correct way to use the RSI as you had offered to do a couple of presentations ago? Yes, a couple of presentations ago, I had my monthly webinar, which was showing you how to correctly use the RSI. That is a totally different webinar, but I will be completing that at the beginning of May. That's my monthly webinar I give. This is a totally different 3-hour webinar, which I'm covering something totally different. So if you're able to view that in May, I believe the first or second week of May, I will be completing that and showing you the proper way. That's a totally different strategy, a totally different way to trade with a totally different indicator, what I'm talking about today. So you're going to get 2 for 1 with these 2 presentations. Lots of free information. As I said, I give away a lot of tons of information, free stuff. Says Steve, can you show us some of your favorite trade examples? Yes, I'm going to show that in part 2. And all of the trade examples I'm going to show you are current, and they're going to be using everything, virtually everything I showed you today. Okay? Everything for entry, everything for how to spot the signal, everything for where you should be, using the confirmation method will all be shown in current trading examples, both short-term and long-term. So stick around for the second presentation. Many people believe that a tool against whipsaws is ADX, which I personally find almost useless as it lags terribly. Once again, I have not, found a lot of consistency by adding on multiple indicators. If anything, they just seem to, take away from my odds for success. I'm not saying that. I'm not putting down the ADX. It's a fine tool, a fine indicator. I've used it at times. But the point is, I'm just looking for consistency. I don't care what indicator it is. I don't care how it works. I don't even care if you explain to me how it works. But just as long as it gives me an edge. And when I say edge, I really mean a simple edge. Exactly, boy, it's KISS. It's keeping it simple, stupid. But it's just really keeping things simple. That's all it's about. It's not about, trying to complicate your trading. Once again, the more you complicate your trading, the less your odds for success. I really do not understand why most traders think that the more you complicate and the more things you throw on top of your trading, the more chances for success you'll have. When it's the exact opposite. You're really decreasing your chances. The simpler you keep things, 1 or 2 indicators at most, not listening to outside noise, you'll really focus in on what you should be doing. And when you do that correctly, as I've said to many of my students, trading is boring. Trading is not supposed to be gambling. It's just supposed to be, being in sync. You get in, you get out. It's very boring if you're doing it correctly. Michael asks, how many strategies do you use in FX and which time frames? We have roughly about 7 strategies for the Forex markets that we incorporate. I would say 3 of those are mainly for intraday, and about 3 of the other half can be used intraday or for longer term. The one I'm sharing with you today is personally the one that I use the most, along with another one. This is a great strategy. It's usually reserved for our members only. I'm going to give you the basic foundation for it, for entry. And it's a really great tool. I know we have some people here that are students of ours, that are members, that have purchased this strategy, and they love it. They have started in the last month, and they've shown consistent gains where it paid for the course already. So you're asking, do I care about econ data releases and speeches? No, I don't even look. And this started when I was on the floor. When I was working on the floor, as I said, I used to be enthralled with news. I would think this was the only way I knew how to trade. I had to know what the stock was doing. I had to know what the company was doing. I had to know everything about the earnings. I had to know what the president was going to say. I had to know what was going on with interest rates, because this was going to help me make the right decisions. And guess what? My trading was no better off, 6 months later. So these specialists, in fact, one of them I was watching one time. His specialist post was just yards away from mine. And a broker came up to him on the floor and said, the earnings are coming out tomorrow in XYZ. Do you have any idea what the earnings in this stock are going to be? I have a client asking. And he says, and the specialist says, I have no idea. And he says, and the broker says, you have no idea, but you're the specialist. You're supposed to know everything about the stock. This is a big stock. Don't you have any idea what the estimates of the earnings are going to be? And he said, no, I don't care. And the broker said, you don't care? He says, how are you going to know how to trade it? And the specialist said, if it goes up, I'll buy. If it goes down, I'll sell. And I know he was being a little passive aggressive, but basically, in a nutshell though, that's it, because everything was in the price for him. In other words, if it was going up, he wasn't going to try and short it. If he was in sync with the stock, he would know it. And I asked him about this. I said, you don't care about the news, or it's not going to help you make a decision? He said, Steve, say you're outside, all right, you're walking, and all of a sudden it starts to rain. And it's not just raining a little bit, it's pouring rain, and you're standing there soaking wet. Do you need someone to tell you that it's raining? You don't need the person next to you to say, hey, did you know it's raining? You know it's raining. You can feel it. Your clothes are covered. You're soaking wet. So you're going to react off of that. It's the same thing with trading. You don't need anyone to tell you what they think is going to happen. You can see it happening as it happens while the stock is trading. And so when you learn these techniques and how to listen to the market and how to follow it, you realize you don't need that. Now, the only place I would say where fundamental news and econ reports and earnings and things like that are important is if you are a long-term investor. If you're an investor, yes, you do need to know that information. When I say investing, I'm talking about holding from 3 or 5 years to 10 or 20 years. Then you do need to know that information. But many of our strategies hold things for anywhere from a day to a month at the most. And there's no reason we need to focus on what an econ report. Many times reports happen. I have no idea. I'm already in the trade, or I'm getting in because of something else, because of what the strategy told me. So I never look at those things. I hope that answers your question. Now, if you're an investor, yes, I think you do need to know that, regardless. If you're trading stocks, if you're trading the Forex, whatever. But if you're trading with a time frame of 1 to 5 days, it's silly. It's just putting more useless information on your plate that will only confuse you. You'll have to be subjective and try and figure out what it means. You'll get two people coming up with totally two different answers, and you have to try and, there's no consistency. There are some people that do that very well, but they have years of training, or they have this inner way of deciphering it. That's too difficult. Why not just learn how to study these things, and in a few short months you'll be able to see for yourself how to trade without taking years to decide. Yes. Let me see if I can get to any other questions. Could you recap the gray area where price says just above a downsloping 50-period simple moving average? Would you trade it back to the mean? In other words, a 50-period simple moving average? What do you mean by consistently above or below the buy-sell line? Okay, that's a good question, Michael. I think what you're saying is, and this is a very common question, is you want some type of more of a concrete answer as to where price is in relation to the buy-sell line. And here's, I know it's hard to understand now, because when price is above, it means that I'm looking for a setup. And usually for any type of a setup to go long, I need anywhere from 2 to 5 bars. Okay? So if price is above for only 2 bars, and even though the low of the bar may be below the buy-sell line, but the close is above, I still don't have any setup yet. I need a setup of maybe 2 to 5 bars to tell me that this is a proper setup to go long. And then I'm not going to go long unless it trades 1 pip above. So I need all of that information first before. So it really doesn't matter to me if price is kind of straddling the buy-sell line, or if it's only 2 bars above. Once hopefully, if and when you become a member of our course, you'll see I teach setups for each and every one of our strategies. You'll see that it's easy to spot. If there's a setup bar, but it's below the buy-sell line and you want to go long, you're just not going to take the trade. If you have 10 bars above the buy-sell line but no setup bar, then there's no trade. So it's a lot easier to see. These are only things that I can explain actually if you become a member, because I explain each and every strategy. There's a requirements for you to have a valid setup bar to either go long or to go short. And this is part of the learning process. You need to know how to spot these particular bars. Once you spot them, you'll know whether it's a valid trade or not, whether you should be getting in or not. And then you apply the confirmation rule. So I would say, though, just as a rule of thumb, I would say you need at least 2 to 5 bars above or 2 to 5 bars below. Okay? That will help you out a little bit more. I hope that answers your question. You're welcome. I may have skipped some questions, so I'm sorry if I skipped. I only have so much viewing area here. We'll answer a little bit more. Let me retrack here. How many strategies do you use in the Forex and which time frame? Oh, I went over that already. Steve, will you be teaching an exit strategy later? Well, you're going to have to sit around and wait for the next presentation because I'm giving a lot of information. Okay, I'm going to give you tons of information in the next one. In fact, more information that we went over today. So I hope you'll all be able to stick around. And the way I understand it, the next presentation is reserved mainly for the premium members. So if that's right, I hope you'll be able to stick around. I hope most of you are premium members because I'm really giving you all of the basic information on our strategy number 5. Steve, are the 5 minute or is that 5 minute or 15 minute TF too noisy for the confirmations time frames? No. Once again, it's not about the the time frame. Even though personally, I would say yes. If we're trading the Forex markets, personally, and what I teach my students is you shouldn't trade anything less than 20 or 30 minutes. Okay, because of the way my strategies are. That's where you may get whipsawed. So this is one way of keeping you, out of those whipsaws by choosing the right time frame. Now, I personally do not trade anything less than a 30-minute time frame. I know we have some students who swear by trading 5-minute bars, 1-minute bars, and they have moderate success. If you're special enough to do that, that's fine. I do not trade that way, and I do not suggest traders to trade that way. I think you are opening yourself up for whipsaws. Let me see if there's anything else. Yeah, 15 to 1 minute are what most floors use through. They say it's not about time. Once again, this is 15. Just if some of you can't see this, 15 to 1 minute are what most floors use, though they say it's not about time. See, this is what I'm talking about. You got to get away from what most people use. This is what was taught to me by these specialists. Who cares what most people use? Who cares what someone else is doing? See, that is a loser mentality because you're thinking about outside sources. So the point is, don't worry what other people are doing. Don't worry what some guy in a chat room is telling you. Or that is basically you're setting yourself up a recipe for disaster because you're putting your importance on the wrong thing. I don't really care what anyone else is using. I'm caring about what we've shown to have levels of consistency. And once you start thinking with that mindset, you start becoming more of a winner in trading rather than having a losing or a negative mentality. So that's one of the things to think about that traders often say is like, well, I heard this, that so-and-so uses this. That's what we're trying to get away from. Okay? Don't ever feel that something is justified because somebody else did it. We're only concerned with what the market is doing. Once you start doing that, is what you do is you turn yourself into a victim because you relied on someone else, and then if it doesn't work, it's like, oh, they ruined me. They gave me the wrong information. See, you always set yourself up to be a victim so that you can blame somebody else. So never go outside and look for answers outside of the market because it's basically a losing mentality. You become a victim and you can blame someone or say it's their fault or, oh, they did it. And that really is just another way of not taking responsibility. A specialist always takes responsibility for his trading. Never blames anyone. Never, wants to put anyone down because he did well. Never wants to put anyone down because he did poorly. Specialist is just responsible for himself. And this is one of the main things were taught to me also by the specialist. Take responsibility for your trading. Okay? That will also get you on the right track. Exactly. Think for yourself or someone else will do it for you. Anything other than that is really a losing mentality. And it's a victim mentality. Because you always give yourself an out. You can always blame someone or put someone down or say, oh, they did it. That's a losing mentality. What you want to do is be winning mentality and say, listen, I've studied, I've followed this, and if I'm wrong, but it's my own decision. It's not because I said this is, this guy said it was right. I followed his trading room, and he said I'm supposed to be doing everything. So really, learn what the markets are telling you, and then take responsibility for that. Michael says, which time frame do I personally prefer? I personally prefer now more of a daily time frame, actually. Basically, though, that's because my work schedule fits into this. But I'm trading. I should say I'm trading mostly daily bars with the FX markets with our strategies. I'm also trading intraday with the E-minis and dailies with stock. So I don't have enough time to be day trading everything. But it seems to be working fine, and I should think with our Let's see. The right market is in fractals large or small, depending on price action. But most of the specialists will trade are 15 minutes and under from what I see on average. Remember, once again, I don't know. I really don't care what most specialists are doing or what most traders are doing or whatever. That if it works for you, great. But remember, get away from this mentality of what most specialists do. Who cares? It's like when the gentleman went up to the specialist and said, "What do you think are going to be with the earnings?" He says, "Who cares? So what?" And they said, "But you should know that." And he goes, "Why?" So he taught me that everything's in front of me. If you find something that works for you, then that should be your only reason, not because most people are doing it. If a couple of special traders have come up to me and said, "Steve, your stuff doesn't work. It doesn't work." I said, "Fine. You don't have to use it. I'm not charging you to use it. That's okay." So you have to take responsibility. And if something isn't your cup of tea, that's great. No one's ever going to force it. I would never tell somebody that there's only one way to trade. This has changed things around and turned my trading consistent. Thank you very much. I see that we have about 10 more minutes till the bottom of the hour. Why don't we do this? I'm going to take a 10-minute break, 10-minute break. We'll come back here and we'll start part 2. Now, part 2, once again, is my top trading strategy for trading the Forex markets. I'm going to go into detail. And I'm going to go into detail and share with you the foundation for one of my top strategies, which is strategy number 5. We've had some great trades currently where we just were long the Australian dollar and the British pound using this same strategy. And I'll tell you one thing, we are short the Canadian dollar with this strategy. So I hope you can all stick around. Let's take a short 5-10 minute break, and I'll meet you back here, and we'll start the second part of the presentation, okay?